I'm Matt Bishar with NAREIT's REIT.com, here in Florida for the 2016 NAREIT Leader in the Light Working Forum. Joining me is Cliff Majersik, Executive Director of the Institute for Market Transformation. Cliff, thanks so much for joining us.
My pleasure. Thanks for having me.
Now, when we spoke last year, you said that REITs were positioned to be leaders in the green building space. Have you seen that evolve over the past year?
Yes, we have. REITs have continued their leadership in a variety of ways. Certainly, they're doing a lot. The most important thing is what they're doing with their own portfolio. That's the most important thing, but it tends to not get as much attention as it deserves. They have also been recognized for things like winning the Leaders in the Light award here, and also winning the Green Lease Leaders recognition that IMT runs for REITs, landlords, and tenants that are doing win-win leases where both the landlord and the tenant comes out ahead. They've also done things like go to Paris and make public pledges to reduce their emissions, talked about green bonds and other initiatives that they're taking. So at a variety of levels, REITs, I think, are stepping up their game and being more public in terms of leadership on sustainability and climate change.
Now, aligning the interests of tenants, owners, and operators can often be one of the major challenges to greater improvements in energy efficiency. What are some steps that you see that can be taken to see these parties working more in collaboration?
There are a variety of things that can be done. Of course, the lease itself is very important. A big problem is a split incentives problem where the landlord feels like if they invest in energy efficiency, a lot of the benefits will flow to their tenants, and that can be a disincentive to investing in energy efficiency. So win-win green leases where both the landlord and the tenant come out ahead when the building's more energy efficient, where the landlord can quickly recover costs of making a building more energy or water efficient or otherwise better for the tenants, especially when it's saving the tenants. If the tenants are paying energy bills directly, either in a master metered building or in separately metered or sub-metered buildings, it's important for the landlord to be able to recoup investments that are accreting to the tenant's bottom line. Also, things like tenant build-out guidelines. The tenants control a lot of the energy consumption in these buildings, and a lot of their decisions often right at build out, what lighting they put in, what kind of layout, what kind of office equipment they're putting in. That has a big impact on the energy consumption of the building, the Energy Star rating of the building, and I think landlords are increasingly looking to provide build out guidelines to their tenants to say, all right, here is what we expect for you to do, and in doing this, you're going to be making the building more energy efficient and make us all look better and save everyone money.
And lastly, do you see any regulatory changes or mandatory reporting standards coming that could factor in terms of how much investment companies make in sustainability?
Yes, you see it. There's already 15 cities, 1 county, 2 states that have benchmarking and transparency laws that require public disclosure of the building performance so that the tenants, the investors, the market more broadly, the appraisers have information about the performance of buildings. You've had 4 cities in the last year that have added to that list. Including markets like Atlanta, Portland, and Kansas City, so not just the usual suspects. And you're seeing increase of attention at the state level as well. California in particular passed 2 laws this year, Assembly Bill 802 and Senate Bill 350, that are both pushing for greater energy efficiency. Assembly Bill 802 is about requiring benchmarking and transparency of all buildings, including now multifamily buildings, what will likely be an annual basis. There's an ongoing rulemaking, and it will be public transparency, which will be a first for the state of California. They've already had a couple cities that have done that, but it'll be the first time the state has done that. Also, very importantly, providing for easier access from the owners to aggregate tenant information so that they have a whole building energy consumption information so that they can benchmark their building and comply with that law. And then Senate Bill 350 sets bold goals for doubling energy efficiency in the electric sector and the built environment. There's a lot of work that will need to be done to figure out exactly how they will operationalize that, but that's certainly going to be a big factor in the built environment in California for many years, and California has often been a model for other states, so it's likely other states will follow that.
Great. Cliff, thank you so much for joining us.
Thank you very much for having me.
For more on this and other sustainability news and information, be sure to visit REIT.com.